Support for Short Stops is presented by the Caylum Trading Institute. Check out our website at www.cayluminstitute.com. On today's episode,
everyone else is watching and they're seeing these big negative numbers and their confidence gets affected. People are seeing this and those memories of fear are coming back.
It's trading at 60. What the heck is going on down here?
Is this a game changer?
No, it's funny. Corrections are only considered natural, normal, and healthy until you actually get one.
Call it what you want, a game, an experiment, a gamble. But stock trading in the global financial markets to us is a business. Every day you're surrounded by the noise. Buy, sell, hold, buy more. And we're going to quiet it down and filter out the best trading strategies, tips, and stock picks. You want information on how to find your next bagger or home run? You'll find it right here on Short Stops.
Welcome, guys, to episode 4 of Short Stops. And here with me today is the head of equity traders in Citisecurities, Mr. Chad Pacheco.
Hi, everyone.
So today we've had one of the most exciting times with the market down over 200 points. And in fact, we've been down 600 over the past week alone.
Yes, that's right.
And one of the things that we've talked about, especially in the last podcast, was that we were worried about volatility and being an overbought situation.
I mean, it's not like we did not expect this, right?
It's actually not that bad.
Yeah, definitely not that bad. I mean, if you look at it, where we came from start of last year to now.
I think we hit a high of 9,100.
Yeah, so it's been a long road, and markets, they all take breathers, just like us. And I think we should take this opportunity while it's still volatile to reassess what we're doing, take a step back, scale down our positions, and plan our next moves.
I think the funny part about this is that, I mean, you've gone through so much volatility in your career, I'm assuming.
Yes.
But the funny part is, it always feels different.
Actually, for me, it feels the same. And you make the same mistakes
Okay.
over and over again. Like, we've already had signs. I mean, boss has been talking about the 10-year treasury ever since the start of the year.
Yes.
And back of my mind, I thought, okay, the correction is near, volatility will come. But, when you see those issues like now or, ECP,
CP.
you can't not click that button, right?
That's true. Just to share with you guys, when Chad talks about boss, it's actually Chairman Edward.
Yeah.
And what were the biggest signs for you that we were in overbought territory?
Well, the biggest sign, the number of friends that I have starting to open their accounts, COL, it always reaches a peak whenever the end is here. Anyway, those are just one of the signs. But if you look at the indicators, everything is overbought. I mean, starting from ADX to the MACD to, just looking at the Dow or looking at the SPX, the ADX is about 60 or 70, and I don't think I've ever seen those readings for a very long time.
And the challenge is that usually when you're overbought, it's something that can prolong for a long period of time?
Yes, exactly. Well, that's one of the reasons why, even though the signs are there, us traders, I myself, kept on trading. Because you can't call the top, right?
Exactly.
The only thing you can do is, when you're approaching the top, you scale down your positions, be more selective in your stock picks. I mean, we've been overbought since December or even start of the year.
Yes.
And because if you keep fighting on, the market has been down 600 points, like you said, right? If you keep going on, then you'll just keep on digging yourself a hole, and it's very difficult to come out of it.
That's true.
Yep.
But you talked about how you wait for it, and what is this waiting for you? How would you know when it's a period where I can start buying back some of the shares that you look for?
Well, looking at it from a fundamental perspective, everything's expensive. All our stock picks, from Megawide to Pizza to, it's either really expensive or technically overbought. And there have been divergences. When you have volatility, meaning all the price ranges are getting larger, right? Whether it's to the upside or the downside, you have to wait for it to get quiet. Start looking at those stocks or those leaders that really set themselves apart from the rest of the pack.
Okay. So your first priority normally in market corrections just to look at the strongest sectors in stocks?
Yes. Yes.
So in this case, I mean, what has come out of your watch list
So far?
so far?
Well, Bloom was pretty strong, held a while ago. I think it closed near 12. Those are one of the stocks. Even Wilcon ended up.
Yeah.
So those are the signs that you look at, those that show relative strength to the market.
My next question is, you look at the strong stocks and you know that the market is a little bit volatile.
Yeah.
But even when it quiets down, do you deploy the same amount that you normally do during these times?
What we teach here in Caylum is probing. Right? One of the things that we teach is probing. So you can't go all in right away. You have to have like feeler positions, like 5% or 10% per position first. You just have to listen to the market, right? And one way to listen to the market is to look at your positions. If you're ahead, then you start scaling back into your positions or your normal size.
How do you put your protective stops in this type of environment? Or at the end of the day, is it a matter of being more patient, or you have to be more quick when it comes to your stops?
Okay, it really depends on your plan or your type of trader that you are. I mean, if you're the day scalper, meaning you only hold it for a few minutes to a few days, then definitely your protective stop should be much tighter. But if you're an investor or a swing trader, position trader, meaning your time frame is much longer, then once it reaches a point wherein you have a certain margin of safety, then you can give a little leeway to your stops.
A lot of these things is easier said than done.
Yes. Exactly.
And I think a lot of amateur traders, especially the ones that are starting out, look at this as something scary and as something out of the ordinary. So what would you advise these people, these short-term traders, or especially the ones that are just starting out?
Yeah. When I started, definitely it was scary. I've never seen it before. No, but if you see it over and over again, although you do make the same mistakes in the beginning, in the end, you'll realize that this is actually a great opportunity for us to make money. You just have to play your cards right. You have to step aside when the volatility is there. The thing that we should do right now is acknowledge that we cannot control the market, right? The only thing we can control is our risk.
Do you cap yourself in terms of the number of positions that you have? I mean, we talk about risk all the time.
Yeah.
And is it in terms of total deployment that you have? Meaning, do you still consider cash as still one of your major positions, or are you willing to sacrifice, meaning going
80-90%
in this type of environment?
Definitely not more than 50%.
Okay.
But that's already a lot.
Yes.
If you go back 2013, from our peak of 8,000, it went all the way down to 6,000. So you can't underestimate a correction.
I think that's fantastic advice. You never anticipate how deep a correction can go.
Yeah. Of course, you try during major support levels. I mean, you have no choice, especially if you're a trader. But you just have to make sure not to go all in right away.
Do you limit the number of stocks you look at, or is it, or ano lang, hanggang 3 to 4 issues lang?
Yeah, like I said earlier, I try to separate the leaders from the losers, from the laggards.
Okay.
So right then and there, you can your list will be
Maliit na lang.
Maliit na lang eh. I mean, you can do like a above 50-day filter, and that will automatically narrow down your list to a few stocks.
How different is it though? Let's say you're looking at local versus the global markets, and I know you're trading Hong Kong, US, and Japan. How different is your approach with regards to volatility versus the global markets?
Globally, there are more opportunities. Like you can go short if you're brave. So, I mean, there are more ways to protect yourself from volatility. I mean, there are also options. So the approach is very different. In the Philippines, you have
limited arsenal.
Very limited arsenal. Right? You can only go long. Right? Number two, you only have your universe of stocks is very, very small. Right? So when it comes to the global market, during these times, although I don't go long, Like I look for other opportunities like shorting. So
I mean, we've seen a lot of things come down. We've seen Bitcoin drop from 20,000 to 8,000.
yes,
Ripple from $3, now it's down to 80 cents.
yeah.
Even Ethereum down 40-50% from its high. So in terms of all these speculation, when it starts to break down, at the end of the day, maybe the best advice is just step aside, let the volatility finish, and then see if we can find opportunity again.
Of course, us traders, when we see those huge moves like Bitcoin or even the Philippine market or the smaller capitalization stocks, no, what we feel is FOMO, right? Fear of missing out. But I mean, if you've seen it long enough, like we do, Edmund, you know that there will be opportunities to enter. We just have to wait for the consolidation or the duration or the major duration to finish. Right?
In fact, I was reading through an article. I was reading about the gold rush in the 1850s, and in the gold rush there was a quote: "When you're looking for gold, sell shovels."
Yes.
And apparently during the gold rush, the ones who became millionaires were the ones selling the equipment, selling the shovels, selling all the official supplies, the food and everything to the gold miners.
Yeah, so
and I think
it's the same with Bitcoin.
I agree.
Yeah.
I mean, the ones making the money today are the exchanges,
Yeah.
the one doing all the transactions,
The hardware. Yeah.
Okay, great. Any last piece of advice when it comes to volatility, Chad?
Guys, don't be scared of the volatility, especially those who have been on the sidelines for the longest time. Now you should be happy right now. This is the correction that we've been waiting for the longest time. Don't get carried away by the moves by, like, for example, today ACP. Don't get carried away. Craft a new plan moving forward. It can't be the same because volatility it breaks the norm. So you also have to change your expectations. My biggest advice is to look for the strongest stocks while everything is correcting.
Okay, so there you have it, guys. Chad Pacheco telling you to step aside, look for the strongest stocks, and be patiently waiting for those opportunities to come out. All right, Chad, thanks so much.
Thank you, everyone.
All right, okay, guys, have a good day.